Stackers, today was a high volatility, high information session in gold and silver. We're coming off record territory, and the market finally showed us something important. This rally is strong, but it is not calm. If you want daily updates that combines real market mechanics with a stacking perspective, hit subscribe right now. It helps the channel and it keeps you plugged in while the story is still being written. Are you stacking more at these levels, or are you waiting for the first real pullback? Let me know in the comments. So what actually happened today? Today was basically a tug of war between risk-off tailwinds and profit-taking. Gold dipped slightly as a stronger US dollar and upbeat jobless claims data reduced urgency for safe haven buying. And on the geopolitical side, a softer tone around Iran cooled some of that panic bid that helped push metals to records earlier this week. Silver also cooled from earlier highs, and I want to emphasize this. That's not weakness by itself. At these levels, silver is the definition of a high beta precious metal. When traders take profit, it moves fast. Let's talk about gold like a finance major for a second. Spot versus futures. What's the difference and why should you care? Spot gold is the cash price for immediate delivery. Today, spot was $4,614. Futures are standardized contracts, and the most watched in the U.S. right now was the February gold future, which settled at $4,623 per troy ounce. That means futures finished about $8.77 above spot. That's a premium, a mild contango, reflecting financing/storage and the market's forward pricing. Now here's a nuance the average channel never explains. You can also quote the front month settlement, the January contract, which settled at $4,616. Different contract, slightly different price, both are real. So what moved gold today? Gold didn't crash, it eased a little bit. The narrative was stronger dollar equals a headwind for dollar price commodities, some profit taking after record highs, and reduced immediate fear bid as geopolitics cooled slightly. So question for you guys. If gold can have a hold above 4,600 during a risk-off cool down, what happens when the next wave of uncertainty hits? Do you think that's what's going to push it to 5,000? Let me know what you think. If you're getting value from this breakdown, especially the spot versus futures explanation, tap a like and subscribe. I'm doing this daily, and the market's moving too fast to sit out. Alright guys, let's do a silver deep dive, what everyone's here for. Where's spot versus futures, and what today's numbers imply. Spot silver was at $92.50 an ounce today. Meanwhile, the COMEX March silver futures contract shows a close around $91.98. That's basically flat relative to spot, slightly under. In plain terms, the futures market wasn't screaming shortage tomorrow morning, but it also wasn't breaking down. It's staying tight, volatile, but still bid. Volatility, why silver can drop hard intraday and still be bullish. Silver had extreme swings recently. Even intraday drops are being described as profit taking versus a pause rather than a collapse. At these levels, silver is a momentum market. When it runs, but when it exhales fast, and we saw that today. If you're stacking physical, this matters because your premium behavior often lags the screen price. That gap is where dealers protect themselves. You can typically see anywhere from a $5 to $10 all the way up to $15 purchase price from a dealer. So if your silver is sitting at $90, you can expect to get anywhere from $75 to $85 for your silver. So make sure you're doing your research and your due diligence when you are testing out different dealers and what their pricing is. Alright guys, the index rebalancing pressure you need to know. This week had a specific mechanical force, commodity index rebalancing. The Financial Times reported that annual index changes could trigger billions in gold and silver selling in early January, and silver was expected to be hit the hardest, the kind of flow that can pressure price even when fundamentals look bullish. This is the stuff retail doesn't see. Sometimes the market dips not because the story is wrong, but because a big passive flow has to rebalance. So guys, keep that in mind whenever we are seeing that. We are still kind of in that index rebalance, but going into next week, we should kind of be seeing the fade away from that. All right, so let's get to the silver $100 talk. Will silver hit $100? Why are you seeing it everywhere right now? There's a ton of mainstream coverage asking if silver can run up to 100. Your job as a stacker isn't to get hypnotized by round numbers. It's to watch. It's to watch how fast it moves, how liquid are the pullbacks, and how premiums react. So question, if silver can whip around like this and still stay above $90, does that change how you dollar cost average, or do you wait for the first flush? And here is the good and the bad of this week. Going into Friday, here are some good and bad things we've experienced. Gold stayed near record highs even with a stronger dollar and profit taking. That's resilience. Silver is still commanding attention and holding historically elevated levels despite volatility. The market is wide awake, big participation, big debate, big narratives, which is what trends are made of. And here are the bad risks this week. Volatility is a tax you pay for the upside, and the silver swings can punish emotional decision making. So make sure you're staying logical, guys. Don't let the volatility get your emotions all up in a bun. All right, don't get all over yourself. Mechanical selling flows can create sudden downdrafts even in strong tapes. And finally, headlines can flip the safe haven bid pretty quickly. Today showed that when geopolitical tone softens, gold can cool and so can silver. Here's a simple stacker takeaway for today. When prices are at extreme highs, your edge is discipline, not prediction. Stop trying to predict the price and stay disciplined. Think about when silver was sitting at $25, $40, $50, and $60. You weren't getting crazy, you were staying disciplined, and you were stacking and you were holding. If you're a long-term stacker, consider consistent buys, but watch premiums like a hawk. Check your local coin shops and see who has the best price, because at the end of the day, silver is silver. And if you have a relationship with the coin shop, but they are higher in their premiums than another coin shop, try talking to them. See if they'll match the other ones, and if not, business is business at the end of the day. Your goal is to get the lowest dollar cost average possible and stack the most amount of ounces of silver. If you're trading paper, respect margin and respect volatility, and please be careful. If you collect numismatics, remember, bullion moves can lift demand, but true numismatic value still depends on grade, rarity, and market depth. If you want these daily updates with both the market mechanics and the collector's mindset, subscribe to the Daily Stack Report. Drop a comment. Are you stacking silver at $90 or waiting for a pullback? I'll read the best takes in tomorrow's video. As always, guys,